If you want to invest in the stock market but you don't know where to start, or if it's intimidating to you, then I have good news for you. I'll tell you everything you need to know to start investing confidently today. I've heard a lot of questions over the years, so I have a pretty good idea what every beginner is worried about. So I'll teach you what you need to know to start investing in the stock market. You won't be an expert yet, but you'll know enough to start investing in stocks and know what you're investing into. And that's important. So first of all, let's start with the basics. Investing in the stock market means that you're buying stocks, obviously. And stocks are really just tiny part ownership of a company. So let's say you buy one share of a company that has 100 shares in total. You would now own 1% of that company. Of course, publicly traded companies have a lot more than 100 shares in total. Amazon, for example, is split into 506 million shares at the moment. So one Amazon stock is a tiny slice of a gigantic corporation. By the way, you might have noticed that I'm using the term shares and stocks, and they're kind of similar, not exactly the same, but I won't go into details because that would require a history lesson on the stock market, so we don't want to do that. So for now, just remember that they're similar, it's pretty much the same thing. So now that you know what a stock is, how do you buy them? For that, you'll need the help of a broker, which sounds like it's going to be complicated, but it's not, thanks to the wonders of the internet. Your bank probably offers a brokerage service, which is perfect for convenience, but they usually charge a fee every time you buy or sell a stock. So it's not ideal if you want to avoid paying fees every time. So the best option is to use a free brokerage service. I'll give you my recommendations for the United States and Canada in the descriptions, but if you live somewhere else, a simple Google search will give you everything you need. And as always, with anything money related, just make sure you pick a reputable one. Once you have an account with the brokerage of your choice, you simply send the money into that account, and then you can search for a stock and you can buy the number of shares that you want. And here you go, you are now a stock investor. But if your goal is to make a good investment and not just pick any random stock, then stick around and hit the like button. It helps, just trust me. Really. Okay, to be completely honest, it doesn't exactly help you make better investment decisions, but it helps me by telling YouTube that this is a good video. Also subscribe and hit the notification bell while you're at it so that you won't miss my future videos, and that's actually going to help you make better investment decisions. Okay, so back to our investments. Picking the latest trendy stock is usually not a good idea. Plus, you don't want to have all of your money invested in one single company. Lucky for you, there's a solution to both of these problems, and it's called index funds. Remember when I said that a stock is a tiny slice of a big corporation? Well, an index fund is a fund that buys a large number of shares from a lot of different companies and bundles them together. And you get to buy a tiny slice of that big bundle of stocks. This way, you don't need to pick which companies to invest in because you're already invested in hundreds of companies. Plus, you don't need to worry about having all your eggs in one basket because your eggs are spread out into hundreds of different baskets. You might want to invest in a few different index funds, but honestly, it's not really that important if the one you pick is already well diversified. And by diversified, what I mean is that the index fund is made of a good variety of companies that are operating in different industries and different countries. For example, if you're a Canadian like me, you might have the reflex to go invest in a Canadian index fund because that's what you know. But that would not be a good idea. If you buy an index fund that is made of Canadian companies, you would be focused on about 2% of the world economy, plus you would be heavily concentrated in financial and energy sectors. So instead, you can either pick a few different index funds that tap into different regions of the world, or you can focus on corporations that do business all over the world, and there is some index funds that follow these type of companies. If you want the advice of billionaire investor Warren Buffett, you can just invest in an index fund that follows the S&P 500. That leads me to explain something about index funds, and we'll use the S&P 500 as our example. The S&P 500 is what's called an index. It tracks the value of the 500 largest companies in the US, and the fraction of the index that each of these companies take is based on their market capitalization, and that's just the total value of all of their stocks. So the biggest companies make up a bigger portion of the S&P 500 than the smaller ones. It's just a mathematical formula. And what does an S&P 500 index fund do? It copies the S&P 500 index by buying and selling stocks to always follow the same percentage of each of those 500 companies in the index. And since copying a mathematical formula is very easy for a computer, that means you don't need to pay a fund manager that's going to decide what to buy, when to buy it, when to sell, which quantity, and all of that. A computer just follows the formula and makes sure that the index fund is copying the index. And at this point, you might be wondering if leaving your investment decisions in the hands of a computer following a mathematical formula is a wise decision? Well, according to research, the majority of actively managed funds, which are managed by professionals, are performing worse than the S&P 500 index. So yes, leaving your investments in the hands of a computer is usually a better decision, especially when you take into account the fees, because the fees of an index fund are tiny compared to the fees of an actively managed fund. Remember when I said that a computer was making the buying and selling decisions instead of paying someone to do it? Well, this is why the fees are very low in an index fund compared to a mutual fund or any other actively managed funds. I hope that by now you're sold on the idea of investing through index funds, but I didn't explain how to buy them yet. Just like stocks, you can buy them on your brokerage platform, but you need to know the code to be able to buy that specific index fund that you want. My favorite index fund provider is Vanguard, and that's because of the way they're structured. Vanguard is essentially a nonprofit because it's owned by its funds. So any profit that they make, they return to the investors in their funds through lower fees. Now, to find the code of Vanguard's index funds, you can simply type on Google Vanguard plus the name of the index that you want to follow. You can also look on their website, but they have so many options that it might get confusing if you don't understand the terminology. So if you want the code for Vanguard's S&P 500 index fund, it's VOO. You can buy VOO on your brokerage platform and you're good to go. Your investments will grow in the long term. But I have to warn you, investments in the stock market can go up or down very fast. So in the short term, if you sell your investments, you might lose money. So if you know that you need the money in the next few years, then investing in the stock market might be risky. For example, if you're saving money to buy your first house and you know that you'll need the money in, let's say, 2 years, then investing in the stock market might be risky because by then the stock market might have went up or down. It's more likely that it will go up, but there's a chance that it goes down. So if you're not willing to take that chance and have to wait a few years before you can actually buy your house, then maybe you should invest in something different in the meantime. On the other hand, if you're investing for retirement in many years, then the stock market is perfect for you. One important thing that I haven't mentioned yet is that many countries offer tax advantage accounts. Those are accounts that you can put your investment in, like you can buy stocks or index funds in these accounts, and they offer some type of tax advantages. If you already know about that, then pick the right one for you. But if you don't, my next video is going to explain everything you need to know to make a good decision on which type of account to use for your investments. So at this point, you should be able to pick a brokerage and start investing right now. Well, maybe not this instant because it can take a day or two before the money that you transfer to your investment account is actually available for you to invest, but soon you'll be able to do it. But while you wait, you can watch the top video. It's my recommendation if you want to learn more about investment, or you can watch the bottom one. It's YouTube's choice. I hope it's a good one. So don't forget to subscribe if you haven't yet, so that you won't miss any of my future videos. All right, that's it for now. Have a good day, and I'll see you next time.